Hey team, welcome back to the channel. This is my week in review. Oh, it's been a rough week, gotta tell you. I think it's been rough for everybody, so it's not just me, but my account in the past, in the past month, it's gone as high as 205 down to right now 164 and some change. So this past month, down about 18%. This past week, down 8%. Past day it was up. On Friday it was up. So past 3 months down 12.45%. You can see that right here. So it's been a rough market out there. Trump tariffs and everything are causing chaos, and all the layoffs and things are starting to just wreak havoc on the market. There's a lot of uncertainty, and people can't plan what to do with their businesses and their suppliers and things, and so there's a lot of chaos going on. So just got to deal with that and take the long-term approach here and keep moving forward. Let's go over some of my trades last month. This is stuff I still have open. This SMCX, it's in process. I collected 5,460 on that, huge premium. This other one I did a buy to close for 200. Still have this Amazon. I actually did a buy to close on this one. I bought it back for 138. I think it started to challenge my strike price, so I closed it out. Going into March, my trades, this TQQQ trade, this is actually below my cost. I got some notes over here. My cost is 87, but there's not a lot of premium because things have gone down so much, so it's hard to make enough premium with going at my cost. So I was going a little bit below, so I got to keep a very close eye on these. Close this one out. I collected 276. Cost me 21.12 to buy it back. So the result is 254.88. I'm actually going to go to this tab for March. I'm going to make this my new tab because I was doing a latest, the put credit spread. I didn't have these. I only had puts and calls as the type of trade, but I'm doing a put credit spread. So I'm trying to figure out a way with this sheet how to track that. So I have the short strike here. Change the column to, instead of strike price, the short strike. And this will be the long strike for this, and I just calculate the capital at stake based on the differences between there, the short and the long, and minus the resulting premium that was collected. So that's the total capital at stake there. But moving on, back up here, NVIDIA, this expired 3/7. I did a buy to close on that, and collected 182. Bought it back for 32.08, ended up with 149.92. TNA, there wasn't a lot of premium here. I did a buyback, 504, because at the time of expiration, the theta had decayed enough so that I could just buy this back. And there wasn't a lot of premium to be collected there, only $35. This grab, same thing, not a lot of premium, $20. This one expired. IWM, I was still doing calls against my Leaps options, but my Leaps option, things have gone down so much that my Leaps options are worthless, so I'm not going to be trading on IWM until that changes. This one I collected 256. I did a buy to close because it started to go way against me, so I had to buy this back for 664, so I lost 408 on that. SMCX, I rolled this one. I saw it had started to go way against me, so it cost me $1,500 to buy this back. And so I ended up with a 720 loss there, but I ended up doing another trade and collected 960 here. I did do a buy to close on this for 590. That's actually in the works now. I'm not sure if this is going to go through. But I got these live trades marked in pink here because they're below my cost, so I got to really keep an eye on these. Cost of this one was 130. I was selling at 125, so that's still in process. This SMCX was at 60. I felt that was too low. Let's look at SMCX right now. 43. This still has 2 weeks to catch up and expire, so it's got a ways to go. But I thought, well, things could go easily up to 60 with this stock. It's pretty highly volatile. So I'm going to do a buy to close, and I'm going to do another call on these shares at a much higher price, maybe 80 or something, so there's room for it to go up and not challenge and have me lose more money. but that's what I did there. So I ended up with 369.92 TQQQ. Another one that's I think, let's see, my cost is 87 on this. So I've got 3 contracts. I'm doing it at 82 instead of 87. The delta's pretty good at 14. So I collected 165 in there, and that's in process. Keep an eye on that one. This next IWM, I did a 1 day to expiration, 400 shares or 4 contracts. Collected 104, bought it back for 4. Another IWM down here, same thing. 1 day to expiration, 400 shares, so 4 contracts. Collected 100, bought it back for 416. So that's kind of good. I'm crawling my way back. This other NVIDIA here, this one expired. This was a 2 days to expiration put, and it was put at 112 and collected 328, and that expired on Friday, worthless. So that's good. This QQQ, I have this trade on now. I'm not sure if it's going to go through on Monday, so I might have to adjust it, but I'm just playing around with the put credit spread. Selling a put at 479, then buying to open a put at 474, so it's a $5 wide spread. The put I sold, the delta is 2.6, and so I've expanded my sheet here to account for that. So 479 is the short strike, 474 is the long strike. Collected 110 for this, and I'm playing around with this because let's look at QQQ. The market being down so much, it's definitely at the bottom of the Bollinger Bands, and it's started to kind of go back up. So I think it might be maybe trying to recover. Let's go to a shorter time frame in 1 week. I went all the way down outside the Bollinger Band, down to below 30 for the RSI. So it's very, very likely it's going to jump up, and it has already started to jump up here. So it's right around 490. And I'm going to start doing credit spreads here and change some rules around. My rules were like deltas of 20 to 30, and I'm going to go definitely deltas of under 25 just to be safer, and 20 if I can, but there's not much premium the more lower your deltas are, so it's kind of a fine line, but I'm definitely not going to be doing 30s. I want to keep things real safe, and the reason I'm doing a put credit spread here is because it just offers a little bit of safety. So if this goes below 479 and then below 474, I'm going to get stopped out here, and I'm only going to lose like $390. So that's a $500 wide spread. The difference between the long strike and the short strike, which is $500 or 5 points, and so that's 500. But I've already collected 110 for this, and so my max loss will be 390. So that saves me from going, if the market keeps going down, I won't be at a worse loss. And so I'm trying this with 1 contract, and if this works out, I'm gonna play with these a little bit. I might do 5 of these, so I can make $500 or $600 at a time with these. So someone on my last video commented that they want to see like maybe some of my positions and the profit and loss. Let's go look at some of these. JEPQ, my holdings. JEPQ has been just rock solid. My average cost $52.68. It's still above. It's at $53.83. It's always been above. It's been growing. A lot of these covered call ETFs and high yield ETFs are not worth anything because the NAV just declines over time. You can see it's way down here at this point, but it's still up overall. So I like to see that. My total return right now is in the positive 140. This next one, TQQQ, my average cost is $85.96. Current price is $66.99. So market value is $20,097, and I'm down $56.91 on this. NVIDIA, my average cost is $127.81. The current price is $112, so I'm way down $31.50 on this. I've got 200 shares. Vanguard, this is what I'm just dollar cost averaging in. I'm taking profits from my premiums and putting in this growth stock. This and VTI, which is in my Vanguard account. I'm going to just grow these long term. Vanguard is low cost, and they just tend to go up over time. And this is more of a growth stock. So my average cost is $413.47. The current price is $388.64. So technically on paper I'm down on this, but I'm just going to keep adding to this, and I could, dollar cost average right now, buy some of these shares at a cheaper price, which will bring my average cost down. And over time, this will just hopefully continue to grow. You can just see it's just down a little bit right now, but over the past 5 years, it's gone up. You can see during maybe the pandemic time, it went down quite a bit for some time, but it's been growing ever since. And so I like these for, this is my long-term growth plan. This next one is TNA, average cost of $41.83, current price $32.37, so I'm down $47.30 on this. SPY-I, the NEOS high income ETF, I have liked NEOS in the past. They've held their NAV pretty good, but just due to market conditions, this one is down below my cost of $51.88, and so I'm down $544 on this, but I'll probably hold on to this. The premium's really good. Last time I collected $103, so 51 cents per share. So I've got 200 some shares, I think, 202. I'm dripping into this, so I'm buying more shares every time. So I'll let this one kind of go for now. I've gotten rid of most of my other high yield ETFs because they just don't hold their NAV, and over time you lose money. So it doesn't make sense to make premium and lose your capital. This one, SMCX, my average cost here is 108. So ouch, I'm way down $12,000 on this because its prices fluctuated way down to in the 40s. But there's such good premium here. I'm hoping to just make this money back, and maybe this will go up someday, and I can at least break even or sell at a profit. High risk though, very high risk. SMCX follows the SMCI, which has had some problems lately, and I want to switch over to just doing quality stocks that have no issues, and change my rules a little bit so I'm a little bit safer. But definitely don't do what I'm doing here. I was chasing premium. The premiums are amazing, like $4,000 or $5,000 for a trade, and it's awesome. But you can see here I'm down on this right now. And this IWMI high income ETF against the Russell 2000, average cost of $49.35. It's down 40 in the $45.50 range, so I'm down $802 there. And this grab, I'm just kind of playing around with this little stock. It seems to have a problem getting above 5, but I've got 200 shares of this, and I can just make a quick trade. I'm down $12 in this, so no big deal. So that's kind of like my positions. These leaps call options I've been attempting to do. This IWM 214 and 205 are way down. You can see minus 54.08, minus 227.28, and this Amazon minus 54.84. There's still time for this to turn around, but look at Amazon, for example. My strike price for this Amazon leaps was 180, and it's gone down to 199. At the time I made this trade, it was 230. Same thing for these IWMs. Short strike at 214 and 205 respectively. The strike price was at the time 240 and 221.60. So IWM is now 205. It's these options are pretty much worthless. Again, there's some time for these to turn around, but it doesn't really make sense to sell calls against these right now when things are in this position. So I'll just do, I'm going to start doing some more credit spreads, maybe some call credit spreads and some more put credit spreads going forward. And again, I'm changing my deltas to go hard rule, less than 25 delta for calls and puts. But yeah, that's kind of the way things are right now. The market is definitely shifted. It's in a downward trend. Friday it went up, so that's good. I'll just continue to hold the positions I do have, and hopefully they'll turn around and come back up, and I won't be at such a big paper loss here over time. So that's just the market, and that's how you got to play it for the long term. The entire market is just kind of down right now, so I'm just going to make smaller trades. Right now I'm only up to 388.77 for the first week, and I'm hoping to just tone down my expectations. February, my premium collected was 21,354. In January it was 10,315. I'm going to reduce my expectations to be happy with $2,000 to $5,000. My goal is to make at least $2,000. Some of this money I've got in my account comes from selling a paid-for condo where I was making $1,800 a month on that. So I at least want to make, about $2,000 a month. So make it worthwhile to have sold that thing. So going forward, I at least want to make 2,000, but I'd be happy with 6,000 a month. That's 60,000 a year. And I think I can do that with the capital that I have. So keep watching. Thanks for watching this one. If you got any questions, let me know. So that's it for now. Don't follow my trades. I'm definitely not a financial advisor. I'm just showing what I'm doing. And right now I'm scrambling to try to keep my losses at a minimum and find a way to keep making money in this downward market. So hope you got some value out of this. If you did, please hit that like button and subscribe to my channel, and we'll see you on the next one. Thanks a lot.